more to another video. So today I'm just going to share a little bit on the portfolio here, REITs and companies that pay me out every month for simply having my money sitting there. Now, most of these don't have that much capital growth, so we're talking about just the buy and hold. And when I buy and hold on some of these companies, I'm looking at least 5 years out. If it keeps going great, then I'll just leave it there even further and let those dividends compound. And so all of these are REITs with the exception of SPHD. And I'm going to share with you just the amount of money that I'm getting paid just for simply just buying and holding. We're not talking about any swing trading or any options or just nothing but simply buying and holding, okay? So, and then I'm going to show you where you can look all the dividend payments on the websites. So we're going to start off with SPHD from the S&P 500. This is a high yield, low volatility ETF. This one pays me 15 cents per share. Now, total, that's in a month, I make $79.95 every other every month on a different day of the week, of course. Now, all these don't have the exact payment date, so every other day I'm getting a check for 79.95 here, 141.60 here, so in form of a dividend, which goes into my brokerage account. And because I have them on the DRIP program, which is a dividend reinvestment program, these dividends keep compounding. And so it's like best way to say it, I guess, is getting paid interest on interest on interest on interest. So these dividends keep growing every month because of the DRIP program. That's the great thing about the DRIP. They keep compounding. So this $79.85, it's going to be a little over $80 next month. And so the next month it's going to be a little bit more and a little bit more, and then just keeps on compounding. By the time you know it, you're receiving a few hundred, a few $1,000s every month on each one. And these are just simply the buy and hold companies for me. And I'm looking at least, like I said, 5 years out into the future when I'm buying into these. Now, not all companies I'm doing buy and hold. Some of them, of course, like you've seen in my videos, I'm doing options trading. I'm doing covered calls, selling puts, swing trading, day trading. So these are just some of the ones that I'm just buying and holding, not touching at all. So SPHD again pays out currently 15 cents per share. So this one brings me in around $80, once a month on a different day, of course. So we're gonna look at the 5-year chart, for example, here on SPHD. So this is 5 years back. This is a 5-year, 1-month chart. So like I said, these don't have much capital growth, but some of them are pretty stable around the same average price. So even if they're around the same average price, your money's working for you. It's building those dividends, compounding in the meantime. And like I said, not much capital growth, but we're just talking about buying and holding. So 5 years ago, let's say May 1st of 2015, this was trending at $33.16. From there, slowly but surely started going back up. And it was trending right around a little above $40 before the market crash, and came down all the way to the 20s, $20 average price. And like I said, right now it's a great opportunity to buy into a bunch of these companies. If you're looking a few years out, at least get some dividends, compound those dividends. And who doesn't love dividends? It's cash flow, passive income for not doing anything. And so this is a 5-year chart basically. So it was like I said, it was just trending around the same average price. The next one, you know what? Before I actually move forward, let me show you where you can see all this information on the dividends. See their history and how much they're paying, and how much they've been paying for consistently, and all that. If there's been a dividend cut. Now, a lot of people say, when you invest in the high yield dividend companies, that it's like a trap basically. But when they do cut a dividend, you see that from a mile away. If they do cut a dividend, some of them do cut a dividend, but then some of them raise it again. So for me, as long as it's staying around even the same average price, as long as it's paying out a dividend, that's passive income for me. I'm gonna take advantage of that high yield. If something happens where the company's gonna cut its dividend by 50%, or it's just not gonna pay a dividend anymore, you see that coming a mile away. So you can always, get out and then just go back in if it ever comes back, or just go into a different company. So this is basically the NASDAQ website. You can just put in the ticker symbol. The whole dividend history will pop up. It tells you which day of the month you got to have the shares by, which is the ex-dividend date, the record date, declaration date, and payment date. For example, the ex-dividend date on SPHD was the March 23rd. So it's going to pay 15 cents per share. And the payment date, so you're going to get paid on the 31st of March. So this already passed. So I got paid $79.95 on March 31st. And it just goes directly into your brokerage account. But since it's on the drip, it just uses it to buy more shares of SPHD. So the next one would be Main Street Capital. Now SPHD is not a REIT, by the way. So Main Street Capital, all these are REITs right here. So real estate investment trusts. And the way I see it, it's just like investing in real estate. And you have tenants that are paying you monthly checks, rent money every month consistently. You get a paycheck every other day throughout the month from each one. So Main here pays out 20 cents per share. So this one I'm getting $141.60 per month. And then next month it's going to be a little bit more, of course, because this is going to be reinvested into that same company. So $141.60 on Main Street Capital. We're going to look at the 5-year chart. So again, this is a 5-year, 1-month chart. 5 years ago, it was trending right around the $30 average price, came right back down, up, down, up, up. So this is what you got to remember. Stocks, they go up and down all the time. If you're looking, long term, 5 years at least, this shouldn't bother you at all. As long as those dividends keep coming, as long as it's a stable company, even if it's at the same average price, you're compounding some interest in the meantime. Now, I don't do this on all the, I don't use my money to do this on a lot of companies because, I just kind of distribute it with different plays, different strategies, cover calls. But these are just some of the ones that I'm just simply holding and just collecting dividends on. Now, there's other companies where you can, invest a little bit less and make around the same money. So I'll show you that after this, though. So this one was trending right around the $30 average price, right before the market crash was trending right around $45. It went down all the way to $14.11 per share. So this is when you got to take advantage. A lot of these companies, they're on sale, man, and they're paying out a dividend. Sometimes they'll cut a dividend, but sometimes they'll raise it back up. So in the meantime, take advantage of those dividends, high yield dividends that are coming in. So this one, like I said, this one is paying me $141.60 so far. Now the next one is PIMCO here, pays out 13 cents per share. I get $96.46 on this one. But let me show you actually, I keep forgetting the steps. So on Main, so SPHD paid out on the 31st of March. Now this page loads a little slow, so sorry about that, but I just want to go through every single little thing, well, not every single little detail, but at least the most important stuff that you can see on the dividends, if you're into dividends, of course. By the time this loads, I'll probably, oh, there you go. That's the thing I don't like much about the NASDAQ website. I should have used the dividend channel one. But then after a few tries, it'll ask me to register, and I don't want to do all that. So here we have Main Street Capital, still loading. Okay, while it loads, so you can see the 5-year chart. Again, there's not much capital growth. And this video is just simply about buying and holding. Okay, of course you can do other strategies which might bring you some more money, but you gotta diversify. You gotta do more than a single strategy out there. I do quite a few strategies, like you've seen in my videos. I do covered call writing, selling puts, trading options, buying, selling, dividend capture, swing trades. So this is just one of the many strategies that I use. Just simply buy and hold, get those monthly checks coming into my account every month. So let's go back to main over here. Oh, currently unavailable. Okay, but anyway, let's move on to the next one. Oh, that for nothing, right? PTY here, PIMCO pays out 13 cents, so I'm getting $96.46 on this one. Again, all these actually change every month because I'm doing the drip. So this one's going to be like 80 something next month. This one will be maybe 140, a little bit more, 140 something more. $96 would be like $97 maybe. This one, SCM 76, will be a little bit more because they're compounding. You know, I'm getting paid interest on interest on interest every month. PTY, let's go check out PTY here, PIMCO. So this is a 5-year chart. Back then was trending at $15.98. This is May 1st of 2015. Went down all the way to the $12 average price, came right back up. Again, not much capital growth, but it's been stable. During the market crash, which is still, you know, we're still in the crash, but you can see that it went down all the way to $9. This one went all the way to $9, so it dropped by $10. And I picked up a few more. I averaged down because of the drip, and I'm just compounding those dividends. And the next one is Suns here. So Suns pays out 11 cents per share. I get $86.13 on this one every month. Now let's see if we can load Suns at least for PTY. What's the next one? Let's go skip straight to Suns. Let's see if we can load it pretty quick. There you go. Suns. Again, it's loading. See, and I wanted to do this live. I didn't want to have like all this prepped up and have different multiple pages on the dividend history. I just wanted to, you know, do it while I'm talking in the video so you guys can see where to look this up. So this one doesn't, let's see if we can, yeah, dividend history. There you go. So again, these companies, they don't have much capital growth. But as long as they're paying out a dividend, you know, it's cash flow, passive income coming every month for not doing anything. You just, you know, make money while you sleep. So you can see right here, the ex-dividend date is on the 22nd of this month, April. And the payment date, I would get paid on May 1st. So on May 1st, I'm going to get a check, a dividend into my brokerage account that's going to be reinvested for $86.13. And the next one is Gladstone. This is a pretty nice one too. Gladstone, it's pretty cheap right now too. So Gladstone, this is a 5-year chart again. So back then it was right around $8.79. Went down all the way to $5.91. Came right back up, and like I said, it's right around the same average price right now. Before the market crash, it went down all the way to $4.04. Right now it's at $6.17. But this one alone pays me $69.16 every month. Now let's check it out, okay, when the next dividend payment is coming up for Glad. And if you guys are into dividend stocks and you want to start compounding, I would recommend you guys you know, do the DRIP program, which is Dividend Reinvestment Program. Once again, nothing but compounding those interests. By the time you know it, you know, those dividends are going to be super huge for you to you know, be living off your dividend income, solely on your dividend income. Gladstone Capital. The other one that's also good is Gain, and there's a bunch of them that I you know, swing trade and don't have right now, but I had before and I'm looking to buy again. So let's look at the Gladstone right here. I don't know if it's maybe my computer that's slow, or it's probably just the NASDAQ website. I mean, a lot of people are using it, maybe, right? I'm not the only one. All right. Come on, Gladstone. There you go. Load up, load up, load up. There you go. So the ex-dividend date on this one was the 19th of March. Payment date was the 31st of March. So I got paid on the 31st, $69.16, which was reinvested into that same company. The next one is one of my favorite ones. It's LTC Properties, another REIT, which pays me out every month. This one I got paid $162.83. It pays out 19 cents per share per month. So when I say per share, so it's like you buy one, you get 19 cents for each one that you buy for each share. But so obviously I have a whole bunch of shares because I'm compounding and I'm buying more and more every month. So this one pays me out. The payment was $162.83. And let's look at LTC. LTC Properties. This is a 5-year chart. Back then, May 1st of 2015 was around the $40 average price, went all the way to $54, came back down, up, and back up all the way to around $50. And during the market crash, it came down to $24.49. At the current time, today is April 13th of 2020. It's trading at $35.57 currently. So see, it's got it's big swings up and then back down, up, down, and then back up. So in the meantime, you're collecting those dividends, compounding them. So again, just I keep repeating this, but there's not much capital growth on these. And again, we're just talking about simply buying and holding. So this one pays out, like I said, how much? 19 cents per share every month. And let's look at LTC. And the great thing about looking all this up is it gives you a better idea on how consistent the dividend payment is. If there's been any cuts, how long it's been paying out the dividend for. So you want to look at all that, see if it's a stable, at least a stable company, even if it stays around the same average price, like I said. But you're trying to get those, dividends coming in, so you can use that money to either reinvest, or you can use it to pay some bills at the end of the month. Now, some of the REITs that I hold, I do have automatic withdrawals, so they, go directly into my. Did I do the wrong one? No, oh, I see. Probably thought I did Litecoin. So, you can use that money for whatever you like. Some of these companies, like I said, they go directly into my bank account, withdrawn every month automatically. And so, because I have automatic payments like on my phone bill and other bills, so it's like I don't have to worry about, some of the bills. I just basically just leave them there. Just automatic payment every month. And then that's when you start getting rid of some the bills that you have. What's wrong with this today? I put Elite. Yeah, I did put LTC Properties. Sorry. Anyway, takes forever to load, I know. But I just wanted to share this video with you guys. I don't think I want to wait for that page to load. I wanted to show you the history on that too, on everything that I'm holding. But either way, I wanted to give you an idea on how compounding works. So these dividends keep compounding month after month after month, and you can just keep growing those dividends. Now, this is again just buying and holding. There's other companies that out there that you can do covered calls on that will bring you maybe a lot more money than simply buying and holding. I'll give you a good example. Neo. Now, Neo does not pay a dividend. Okay, so on Neo, since it's a very cheap stock, and you can actually write some covered calls on it, monthly covered calls. So let's say if you were to buy 100 shares of Neo, right now you would pay around $2.92 per share. So see, currently I have 500 shares of Neo. I'm up $95. But if you do covered calls monthly on Neo, see, like today I did May 8th covered calls. I wrote 5 contracts. For those contracts, I got paid $24 for each contract. So for each 100 shares that I had, I got paid $24 in premium that was credited into my account the minute I sold them. So using $300, we're gonna say 300 because it's at $2.93. Using $300, writing monthly covered calls on this will bring me more money than simply buying and holding some of these. Now, you would say, why wouldn't you just do, covered calls on Neo then? Well, you gotta diversify a little bit. You gotta have a little bit of everything. You can't put all your money on a single strategy. You gotta put money on different strategies, right? Like I do covered calls, selling puts, buying puts, swing trading. So you gotta do a little bit of everything to kind of take advantage of everything. So when one is down, the other ones are making you money. So I just want to make this video real quick for you guys to kind of show you what the power of dividend compounding is. If you guys are into dividends, don't forget to like, share, and subscribe to my channel. I just started this channel maybe I would say about a year ago, and then I'm trying to grow it little by little. So thank you very much for all the people that have subscribed lately, and then I'll be making more videos in the future for you guys, okay? So until then, I'll see you guys on the next video.